Good morning, everyone. This is Brian Dallum with FS Grain coming to you on a Tuesday morning, March 1st, for a quick market update video here. Needless to say, I got a lot of information. I'm going to try my best not to make it too long here. Obviously, as we all know, the Russian invasion of the sovereign state of Ukraine has certainly shaken up the market. That is all markets over the past 6 business days. Quick thing of note here is typically what we see when there's uncertainty like this in world economies and the world market in general. Your investment money tends to look for safety as fast as possible. After 2 massively profitable years in the financial markets, we see the big investment money pulling their money out of the financial markets with this uncertainty of what may or may not happen in the Eastern European area right now. We've watched the Dow Jones for the month of February lose about 6.5%. The NASDAQ as of today down about 5.5%. Again, pulling their money out of markets where they're nervous. And typically when they do, they buy things they can hold. They buy commodities. Things you can get your fingers around. The gold market is up almost 8% on the month. The US dollar index is up at about 2.3% on the month. Crude oil up almost 20%, 18.1%. We're certainly seeing that at the pump right now. A large part of that due to the fact that Europe in general gets about 40% of its gas and oil from Russia. So a lot of unknowns there. And then, of course, for you and I, the ag markets, soybeans up about 12.2%, corn up a little over 15%, and the big winner, wheat, up about 22% during the month of February, again, due to the fact that the Black Sea is a large exporter of Russian and Ukrainian wheat as well as corn. So we've watched the investment money jump out of financial markets as they're nervous and jump into commodity in general markets because that's usually a safe haven. And that's really played out here over the last 20 days. If we look quick at the energy markets, again, thinking a lot about our neighbors in Europe and how they're being affected by this invasion. The fact that 40% of the gas and oil that Europe uses on a daily basis comes from Russia. We've watched their natural gas prices spike twice here. And even on Wednesday there last week during the invasion, a huge uptick. Lots of gaps here in this market. But again, this is going to be a very expensive gamble with all the sanctions for Europe. Same thing with oil. We have to think back here during the height of the pandemic in 2020. I don't remember if everyone remembers or not, but we had that single day where people had to stop and ask the question of, can crude oil trade negative? Is it negative? Is it worth less than zero? And it was for a brief moment on paper there. And here we are, 18 months later, trading over $100 a barrel. Again, all of this so much to do with the unknowns surrounding the invasion in Ukraine right now. So lots of expenses coming to Europe and will be feeding over the United States here as well. If we skip ahead, the good news in all of this as a farmer in the United States is our federal crop insurance process. We began during the month of February establishing an average price for November 22 bean futures and December 22 corn futures. That is our spring price. This is our base price for our crop insurance program. The good news is our soybean average price on no futures hit $14.33 yesterday. That is the highest level ever that we've ever had for a February average on new crop beans. Again, higher than the record in 2011, which was $13.49. You'll also notice for corn, this is the second highest level we've ever had for crop insurance. Again, ahead of that year of 2011, it was $6.01. This year, our farmers have a chance to work off the $5.90 spring price. So these are huge levels in actually probably one of the most important things that I'll talk about in my short video today. This allows the U.S. farmer with the massive amount of risk, the massive amount of capital he has to put into planting this crop, a chance to cover that, to remove the price risk of your input costs, cover that cost and continue marketing, but buy a crop insurance program to cover your price risk. It is so important this year. Skip ahead to corn futures. Old crop corn, again, just spiking to levels we haven't seen for over 10 years here. Today, we are limit higher on the May contract at 7.25. That's actually a new high. So again, we even surpassed, you can see that spike last week, and then the limit moved lower the previous day, and here we are 2 short days after that, trading to new highs. To me, this says there's huge profit in this. I think the farmer needs to be cognizant and continue selling your old crop off. Keep the trucks moving, keep the sweeping. Can prices go higher? You bet they can. But if I sit back and look at the volatility over the last 4 trading sessions here, what it tells me is this market moving up to these new highs can just as quickly drop below them. And as we all know, these markets tend to drop faster down than they do to rally higher. Same thing with new crop corn. Again, not setting new highs there quite yet, but certainly making a stab at it here today. 6.25 Dece futures. Again, crazy profitable levels. We also have that crop insurance price to protect us from our cost of inputs. So again, I wouldn't want to get wildly out of control on new crop, but certainly if you haven't done anything yet, there's too much profit on the table here not to get your first 25 to 30% marketed in some shape or fashion. Skip ahead to soybeans, old crop bean market. Again, watch the volatility here. Interestingly enough, though, I'm going to skip back to corn. So the Black Sea is a big exporter of corn from Ukraine, wheat from Russia and Ukraine, and actually sunflower seeds, which we haven't really paid that much attention to until now, but certainly things that are affecting the corn market. Soybeans not really grown in that area. Instead, the bean market has its own set of issues. The South American crop continuing to shrink. Granted, they're about half harvested right now, which is ahead of schedule. But the general consensus is we are down off of a record size, but still a big crop, but not near as big as originally anticipated due to the dry conditions during the growing season. So again, we've seen a huge rally here. Again, the old crop bean market has rallied almost $4. I'm going to slow down here and let you all kind of think about that for a minute. Since December, soybeans have rallied $4.40. So just unbelievable move in the market in a short period of time. New crop beans, same thing, $12 to $14. This is a $2.70 rally there. Again, opportunity to get your marketing. If you have not gotten started already, what a great place to get some things moving on beans. And again, as I mentioned, soybeans have some other things going on, running them higher right now. Palm oil, record all-time highs ever, period. You can notice the limit higher trades here on the palm oil market. So this, as I mentioned before, has a lot to do with sunflower oil, sun oil that comes out of Ukraine. Nothing is happening in the ports of the Black Sea right now. All trading, loading, logistics has been halted completely due to the Russian invasion. We don't know when that will start up again, if ports have been damaged, how long it will take, thus the premium being put in the markets. You can also notice over here the canola futures are rallying higher. Now, there's been some other things there. The Canadian prairies had pretty strong droughts this past year, which really cut down on the canola crop. Canola oil, veg oil, soybean oil, anything in the veg oil complex is really thumping at all-time highs right now due to the fact that we've had a canola crop shortage. We've got export issues of palm oil and sun oil around the world, and soybeans in general are getting a little bit tighter. As we talk, the South American crop is a little bit smaller going forward. So lots of things going on to help the soybean market rally at this point. Now, I said a lot of bullish stuff there, so I'm going to have my warning written across the top of the screen here. Opportunity and risk. We have to be cognizant of both. There's great opportunity to lock in massive profits right now in these markets. However, understand that we saw a $1.76 move in soybeans in 12 hours last week. From the day on Wednesday when they started invading, when Russia crossed the borders invading Ukraine, to how it ended at the end of the day there on Wednesday afternoon, $1.76. The risk, the volatility in the market is massive. The first day that we will see any sort of successful talks between Russia and Ukraine, or whether that may be Russia backing its forces out, that may be Ukraine throwing up the white flag and giving up. But any sort of ceasefire is going to really take the wind out of the sails of this market. And we're not going to know when that happens until it's too late. My point is, take advantage where you can, manage your risk where you can, but be ready for volatile, violent swings here over the next week, 2 weeks, 3 weeks. We don't know how long this is going to take. And I guess the thing to, if we feel like we've done enough of our old crop, we've taken all the profit, we've done enough new crop that we don't want to get too far over our skis in terms of marketing when we haven't even planted it yet, my comment would be we still have another crop year to market. Go ahead and take a look at 2023 out there. There's actually good opportunities in corn and really even soybeans if you're looking at that to get your first 5, maybe 10% locked in out there. So again, I think at this point we continue to monitor things. Don't be scared to throw offers out there to get your old crop priced. Anything's possible when the market moves like this. But again, be ready for more volatility coming forward. So throwing a lot at you today. I tried to keep it as short as I could. But again, let's be cognizant. Always be thinking of how to manage risk in our marketing plans going forward, especially in the times that we're in today. Thanks again and have a good week.